Everyone, welcome to my class. In this video I'll be continuing with the third chapter of class 10th economics, that is money and credit. Students, in my previous videos I have discussed about how the money evolved, what is currency, then I have discussed about the various functions of the bank. Now in this video I'll be talking about credit and what are the different sources of credit. So let's start the topic. Credit is an arrangement in which one's financial need is satisfied with the money or resources of another with a promise to repay in future. In simple terms, credit means loan that one person takes from another or from any institution. Here in this illustration you can see the loan activities of the bank. Various people are having their bank accounts in which they keep their savings, and in lieu of that the bank gives interest on their deposited money. Bank also gives loan to needy people, and when the borrower returns that taken loan from the bank, they need to pay certain rate of interest to bank. That interest is utilized in giving interest to the people having their deposit accounts in the bank. Now, role of credit in development. Credit makes proper use of excess money of the depositors by channelizing it to a profitable investment. In this way, it maximizes the use of country's worth, then enables the borrower to invest more than their resources available with them. It maximizes the use of resources by providing working capital. It helps the lender to earn interest from their savings. What are the different terms of credit? Terms of credit means different conditions in which the borrower and the lender agreed before granting or taking a loan. So it includes rate of interest. What will be the rate of interest? Then mode of repayment, how the payment taken by the borrower will be repaid. Then in which time period it has to be repaid. Then collateral. Collateral means anything that can be kept on the side of borrower as a guarantee. Any assets which he owns can be kept as a collateral with the bank or with the lender if in case the person is not able or fails to repay the taken loan or credit. Then in such condition the thing which is kept as a collateral can be utilized for recovering the money. So suppose if I am owning one house and if I am taking any loan from the bank, then I can keep the papers of my house as a guarantee with the bank. Means if I fail to repay the loan to the bank, then the bank can use those paper for recovering the money which I have taken from the bank. Then documentations required means before giving or taking loan, proper documentation is required. There are different sources of credit. The individual or the organization who grants loans. Banks, NBFIs means non-banking financial institutions, cooperatives, family members, friends, traders, money lenders. These are the sources from where we can take the loans. It can be divided into two categories, formal and informal sources. So let's try to understand the difference between the formal sources and the informal sources. Remember one thing, if we are taking loan from the bank, cooperatives, any institution which is under government, these are called formal sources. And if we are taking loan from the family members or relatives, friends, money lender, so these are informal sources of credit. Now the formal sources are controlled by RBI, whereas informal sources not controlled by anyone. Reasonable and justified rate of interest is there in the formal sources, whereas in informal sources mostly high and unjust rate of interest is there. It granted for productive purposes only in formal sources, whereas credit granted for any purpose in informal sources. More documentation is required in formal sources. No or less documentation is there in the informal sources. Legal proceedings follow to recover loan amount if the borrower fails to repay, whereas in informal sources the lender can take any measure to recover loan if the borrower fails to repay the amount. So these are the differences. This is very important from exam point of view. Question comes on formal and informal sources. Now let's see the advantages of formal sources of credit. Low rate of interest. It adopts judicious policy to recovery of loan. It grants loan only for productive purposes and chances of falling in debt trap is less. It helps the borrowers for effective utilization of loan amount and promote development. Interest rate is fixed considering the prevailing market and economic conditions, and therefore the risk of borrowers are less. These are certain advantages of formal sources of credit. Now, there are certain limitations to formal sources of credit. Let's see. It grants only secured loans. So, the people without proper collateral cannot borrow. Long process and high documentation is required. Less autonomy in utilization of fund. Difficult to get loan to meet small financial needs. It grants loan only for projects that are productive in their eyes. Located at far from the borrowers, particularly in rural areas. So these are certain limitations of formal sectors of or formal sources of credit. Now the advantages of informal sources of credit. Very easy process and instant credit. You're asking loan from your friend, immediately you will get. No documentation is required. So less or no documentation is there in informal sector. Full or high level of autonomy in utilization of funds. Free to fix the loan amount and time and mode of repayment. It totally depends on us. Then loan are granted to meet all kind of financial needs. Now about the limitations of the informal sources of credit. High rate of interest, tough conditions for repayment, undue and unnecessary interference in utilization of fund, unjust and unethical means of recovery of loan if the borrower fails to repay. Mostly grants loan for unproductive purposes, which is detrimental to the interest of the borrower as well as the economy. Now, do credit is always beneficial? Taking loan is always helpful. Credit sometimes may be a burden for the borrower and may lead to debt trap. Credit can be a burden mostly in the following circumstances. Suppose if borrowed at a very high rate of interest, if borrowed money used for unproductive purposes, if invested in a business with high risk of failure. Delay in repayment of loan increases the burden as the amount grow in cumulative interests. Failure to repay the loan may cause charge on the property of the borrower which has been kept as a security against the loan. Taking fresh loan to repay the previous loan and fall in debt trap. Recovery from such becomes very difficult. So, taking credit is not always beneficial. When you borrow money, it has to be for the productive purposes. Otherwise, you can be in debt trap. Why small farmers borrow money or borrow from informal sector? Hesitation to go to bank, illiteracy, lack of awareness, lack of collateral, they don't have property to be kept as a guarantee against the loan, borrowing for unproductive purposes, inability to fulfill documentation needed, poor accessibility to banks, easy accessibility to money lender. So these are the reasons why the people in rural sector, they often prefer to take credit or loan from money lender rather than going to the bank. Is it important to protect the borrowers of informal sector? Yes. Majority of the borrowers of the informal sectors are poor who need financial protection. To protect the borrowers from the exploitation of the speculative money lenders, informal sector lending and the interest earned on it is not taxed, and therefore these are black money. This often leads to conflict between borrower and the lender, which sometimes creates critical law and order situation. Unproductive loans can be used to financial illegal business, to finance illegal business. So these are certain conditions, and that is why it is very important to protect the borrower from the informal sectors. Now measures, what measures can be taken to protect the borrowers of informal sector? Increasing the accessibility of formal sector lending by expanding banking network, easy and liberal documentation, flexible means size and duration of the loan arrangements, then reserved and compulsory lending for the rural and small scale industry, awareness campaigning. So these are the measures that can protect the borrowers from taking credit or loan from informal sector. Now, cooperative societies are working in the rural areas, especially to provide loans at a cheaper rate of interest to the needy people. Let's study about the cooperative societies. Organization of the people joins for mutual help. Cooperative societies are basically organization of people who joins for mutual help. Development of the members is the main purpose and not earning profit. Registered under Cooperative Societies Act. Minimum 10 members are required to form a small cooperative society. Now, types of cooperative society, like the farmer cooperative society, producers cooperative society, weavers cooperative society, customers cooperative society, cooperative credit societies, where let's take example, 10 farmers together forms a society. How? By whatever the savings they are having, they just combine their savings together and forms a cooperative society, and with the help of that saving they can ask for loan from the bank, and after taking loan, that loan can be utilized for improving their cultivations, and whatever profit they'll earn, they'll repay the amount to the bank, and rest can be distributed among the members of the cooperative society. So this is how the cooperative society works. Now, role of cooperative society in capital formation. Cooperative accumulates its capital with the contribution of members. Sometimes they take loans from the bank and non-banking financial institutions in the name of cooperative, and use the fund either in collective investment or grant loans to the needy members of the society. They charges a low rate of interest, as their motive is not to earn profit but the development of economic conditions of its members. This I have already explained with an example. Now, self-help group. Self-help group, it is a small group of 10 to 20 people belonging from the same locality. This is just an example how the self-help group works. This is very important from exam point of view. The main purpose of such group is to help its member for their economic well-being. They either carry on some collective business or creates a fund to lend to the needy members. Government encourages such groups by arranging bank loan at subsidized rate of interest. Origin of the self-help group. Concept of self-help groups developed in Bangladesh. Grameen Bank of Bangladesh is the biggest success story in reaching the poor to meet their credit needs at reasonable rates through the idea of self-help group. Most of the borrowers are women and belong to poorest sections of the society. The idea is the brainchild of or developed by renowned economist Professor Muhammad Yunus, who received Nobel Prize for Peace in 1996 for this kind of work. Students, with this we have ended this chapter. I hope you like this video. Thank you for watching the video.